risk management. Now let's talk about risk management. Okay. Risk management, as the name implies, simply means managing your risk. Every good trader, every good investor must know how to manage their risk, must know how much they are willing to risk in a trade. Okay. Now, you might have the perfect analysis, you might have those very good entries, but if you're a very bad risk manager, you might not be profitable. All right, you might not actually be profitable. Okay, so risk management, like I said, is one of the key things in becoming a successful Forex trader. All right, now risk management, let's talk about that now. Okay, that's why we have our long tool, our short position tool, and our long position tool, and they will help us manage our risk. Right? They will help us calculate how much we are willing to take in, how much we are willing to risk for every trade we get into. Okay, they're going to help us manage our risk and how to calculate our risks actually. Okay, now risk management. Knowing how much you're willing to risk for every trade you're taking is a key part in becoming profitable. All right, it's a very key point in becoming very, very profitable in Forex market. All right, you might not actually be a very good technical analyst, okay, but be a very good risk manager, and you still be very profitable trading in the Forex market. Okay, now I've always disciplined myself not to always have a risk to reward ratio of 3:1. I don't do anything less than that. I mean, I don't do trade of 2:1 or 1:1. Minimum I do is 3:1, and I've always been profitable, even if I have 60%, even if 60% of my trades are losses. All right, let me show you how. Let me quickly visualize that. All right, let's say for a month, let's say for a month, I want to start trading with $1,000, okay? And having a risk to reward ratio of nothing less than 3:1, all right? So, I have a capital of $1,000, okay? And using a lot size of $1 to 1 pip, which is 0.10, okay, and I want to take 10 trades. Risk to reward ratio is 3:1, okay, meaning where 3 is 30 pips and where 1 is 100 pips. Okay, now so let's say for my first trade, starting with $1,000, I lost it. Let's say I lost my first trade, which will give me a balance of $970. All right, now let's say for my second trade, I still lost it, having a balance of $940. Okay, now for my third trade, let's say I still lost it. It happens, don't worry, and I have a balance of $910. All right, for my fourth trade, let's say I still lost it, okay, and I'm having a balance of $880. All right, now for my fifth trade, let's say I actually won my fifth trade, all right, now, which will give me a balance of $980. Remember, when it hits take profit, okay, the pip count is 100 pips, all right, risk to reward ratio is still intact. And let's say now the sixth trade, all right, I won it, which will give me $1,180. Okay, we're still rolling. Okay, my seventh trade, let's say I won it. Let's say I still won it, which will give me a balance of $1,180. All right, now let's say my eighth trade, I lost it, okay, which will give me a balance of $1,150. $50. All right, now my ninth trade, I lost it, which will give me a balance of $1,120. Okay, now the last trade for that month, I still lost it, okay, which will give me a balance of $1,190, which means for the whole week, all right, I am 9% up on my account. Even though I lost 70% of my trades, which happens naturally in the Forex market, and I'm up 9% in my account, this shows you that having a proper risk management strategy is key to trading the financial market. All right. Now, in this module, we've talked about candlesticks, talked about correlating pairs, we've talked about trend lines, we've talked about support resistance, we've talked about chart patterns, we've talked about price action model, which is breaking market structure, shifting market structure, and now, most importantly, we've talked about risk management. All right. Join me on the next module where I take you on a more advanced course on this. Thank you very much.